Welcome to The Explainer. Today we're jumping right into the playbook of investing legend Warren Buffett. We boiled down decades of his wisdom into 5 core principles that are, surprisingly simple, but also incredibly powerful. So let's get into the mindset that built a multi-billion-dollar empire.
Everything starts right here. And these aren't just cute one-liners. They are the 2 unbreakable rules in Buffett's entire universe. Every single decision he makes flows from this one core idea. Protecting your capital isn't just one part of the game, it is the entire game.
So why is rule number 1 so absolutely critical? Well, it's just simple math. If you lose 50% on an investment, you need to make 100% gain just to get back to where you started. So chasing crazy high returns isn't the point. Preserving your capital is. That's the bedrock of his whole strategy.
This quote just perfectly captures what value investing is all about. See, Buffett couldn't care less what the stock market is shouting about a company on any given day. He is laser-focused on one thing: understanding the actual intrinsic worth of the business. The goal is super simple: buy $1 of value, but only pay 50 cents for it.
Okay, so once you get the rules, you need to have the right mindset. And Buffett's genius isn't just that he's good at picking stocks. It's that he has mastered his own psychology, which lets him avoid all the emotional traps that snare most investors.
And this just brilliantly illustrates his contrarian strategy. When everybody's euphoric buying up everything they can, that's when you should be cautious. But when pure panic sets in and people are just selling everything, that is when opportunity is knocking. Widespread fear is truly an investor's best friend because it puts wonderful businesses on sale.
What a great image, right? Buffett uses this to explain that when the economy is booming, it can hide a ton of problems inside a company. But a downturn, a recession, that's the tide going out. And it exposes all the businesses that were poorly run or had too much debt, and it reveals the ones that were truly built to last.
So let's get into Section 3, Buy Wonderful Companies. Once you have the right mindset, you're ready to go hunting. But you're not looking for just any old cheap stock. The goal here is to find truly wonderful businesses that are just built for quality.
Okay, so what exactly makes a company wonderful in his eyes? Well, it's definitely not a gut feeling. Buffett uses a very specific checklist to separate the great businesses from the merely mediocre ones.
Let's break this checklist down. First, he sticks inside his circle of competence, which basically means he only buys businesses he can truly understand. Second, the company needs a moat, some kind of strong competitive advantage that protects it from rivals. Third, he demands a margin of safety. Think of this as a cushion, buying at a price that's way below its real value. And finally, he looks for a long history of solid profits and, crucially, invests only in honest, competent managers he can trust.
This is such a key distinction. Chasing after cheap, mediocre companies is a trap. Buffett learned that the quality of the business itself is what drives long-term returns. A great company just keeps growing and creating value, which eventually makes that fair price you paid look like an absolute steal.
Okay, Section 4. Play the long game. So buying a wonderful company, that's just step 1. The next critical ingredient is patience. You have to start thinking like you own the whole business, not like you're just renting the stock. And that means having a totally different perspective on time. Now, what's so interesting about this number is that it's a filter. Buffett literally says if you aren't willing to own a stock for 10 years, you shouldn't even think about owning it for 10 minutes. This simple rule forces you to ignore all the daily market noise and focus only on the long-term health of the business.
This just perfectly captures his whole view on creating wealth. True investing is not a get-rich-quick scheme. It's about planting seeds in good soil, which are great companies, and then having the patience to let them grow into mighty trees that can provide shade or financial security for decades. It's the magic of compounding, where your money starts making its own money over time.
And that brings us to our final section: the ultimate investment. This might be Buffett's most profound lesson, because it goes way beyond stocks and balance sheets. He believes the single most powerful asset you will ever control, well, it's not in your portfolio.
This is it. This is the ultimate takeaway. Your skills, your knowledge, your reputation, your health, these are the assets that can't be taxed, that can't be inflated away, and that can never be taken from you. They are the engine for all your future earnings and your happiness. And he absolutely lives by this advice. He famously spends most of his day just reading. He says you should surround yourself with people who are better than you because you'll start to drift in their direction. And he guards his reputation like a hawk because he knows it takes 20 years to build and just 5 minutes to ruin. Ultimately, it all comes down to this.
Treat your mind and your body like the one, single, irreplaceable asset you will ever own, because that is exactly what they are. The real goal isn't just about building wealth. It's about building a well-lived life, and that is, without a doubt, the most valuable lesson in the entire Buffett playbook.